Welcome to the show, everybody. It's the Crypto Lark. Today, we're going to be talking about Elastos, the new blockchain for the new internet. We're going to be talking about just what that means after a quick shout out to everyone who's been hitting that like button. And of course, everyone who's been subscribing to the channel. If you're not subscribed to the channel yet, make sure you hit that button down below or the bell to stay up to date with all of the latest in crypto space. Furthermore, this is, of course, not professional financial advice. This is just a dude talking about cryptocurrencies on the internet. Let's get into it, guys. Now, of course, we are talking about Elastos because it has won the community coin vote of the week. So well done to the community for activating on that one. Now, let's break down a little bit just what exactly Elastos is and what it is trying to do. Now, the guys at Elastos envisage a future internet where we will truly own our own digital assets. Elastos is an operating system for blockchain, which is very interesting, designed for security and for the future internet. It's also an open source project, which is run by the Elastos Foundation. It already has a main net running. No need to wait for years for this one to get up and going. And the Elastos phone operating system has a prototype out, which is very, very cool as well. Now, some of the problems that they are trying to solve are things like currently with the internet, you don't actually own your digital assets. Let's say you buy an ebook. Well, that's it. You don't really own that. You have it now on your computer, right? But you can't really resell it. And maybe an ebook's a very simple example, but think about movies or any other potential assets. They are hard to resell, which is of course a problem. Digital assets can be very, very highly valuable if they are treated as ownable, authenticatable, and rare or limited assets. Now look, the guys over at Gifto have just proved this, where a digital rose was sold for $1 million. This is real stuff, guys, and it goes way beyond crypto kitties. And it actually goes into very fundamental things on the internet that have real value. And currently, it's hard to monetize those. So they want to see an internet where users have access to digital content without the middleman, right? Via the blockchain, there'll be an issuance of digital IDs to establish ownership and transfer rights, which is of course the most important part. One thing to own something, it's a whole other thing to be able to actually sell that and transfer it later. That's the tricky part that doesn't quite exist in any good form on the internet as it is. They're trying to envisage the Elastos web as some kind of a special economic zone, which I think is a very interesting idea. They will, of course, be doing a decentralized app platform, because of course. Now, that being said, they are actually aiming to do a decentralized app platform with a difference. They are aiming to fix the current limitations of dApps. That being, of course, storage speed, the cost, bugs, superfluous data stored on the blockchain, lack of flexibility, and, of course, security issues. Now, the Elastos apps will be enabled by blockchain, but will not necessarily run on the blockchain. Now, that's interesting. Now, instead, they will use Elastos runtime on top of an Android or an iOS operating system or another operating system. That's very interesting. So this will be really useful for big projects like, for example, Facebook, right? You'd have a really hard time running Facebook on any current blockchain structure, but you could run it on Elastos runtime, which is interesting. Now, they are proposing to have a flexible main chain, but the main chain is designed for payments. So it's the transfer of Elastos from one person to the other. as well as lots of side chains. Now, the side chains are, of course, where it all starts to become interesting. This is how they are part of the way that they're aiming to really make dApps and different things built on Elastos very robust. So this is where the smart contracts are going to be happening. There will be no smart contracts happening on the main chain. Again, it's only a payment settlement layer. As well as these side chains will be highly customizable, so that if you want to make the blockchain of your heart's desire, well, that's possible too. Now, Elastos will also support the Neo virtual machine. They'll also, of course, have their own, but that will be supported as well, which I think is nice. There are a lot of connections between the guys at Neo and the guys at Elastos. We're going to get into that in a few minutes, though. Now, there are 4 key parts, really, to what Elastos is doing. One is the Elastos runtime. So that can be an independent operating system. It can be its own virtual machine or a software development kit integrating with other operating systems. And that's an important thing to underline as well. It doesn't have to replace those other systems. It can actually integrate with them, and they can benefit from the robustness of Elastos, which is cool. Now, this is an operating system that's really aimed at trying to make the internet a safer place, trying to cut down on some of those common attack vectors that we see, of course, leveraging the power of blockchain to do that. And they're, of course, even thinking, how can we make this applicable to the Internet of Things? And of course, that's where the side chains come in for Elastos as well. So, the Elastos blockchain, that's part 2. This is where devices, people, websites, assets, all can have a digital ID. Now think about how powerful it is for a second. If you can verify a digital ID of a website or a person using the blockchain, that's awesome. Think about the safety features. I mean, how much or how many situations have we seen recently where mirror sites come up for ICOs, for example? Well, that wouldn't happen. You just check the digital ID and see, well, that doesn't have the digital ID. There it is. I know it's kind of silly anyway, because people do get scammed quite easily on the internet, but this could help set that up in a situation where people can be protected at least a little bit more. The Elastos carrier is part 3. This is a peer-to-peer platform caring for the network traffic between the virtual machines. And of course, the 4th stage is the Elastos SDK, and that will be needed to access these digital IDs and also to access the carrier services. Now, Elastos has chosen a proof of work model. Now look, proof of work has proven to be secure. That's the one thing proof of work really has going for it. We could sit here and talk about, you know, the use of energy and all these different things, but realistically, it is proven secure. Proof of stake, even though it's part of their model, still has some kinks to work out until we have a really provably secure proof of stake model that goes over time. Now, they are doing merged mining, so this is auxiliary proof of work, if you will. Some other projects actually use this in the space, so they will essentially be reaching consensus on the Bitcoin blockchain at the same time as they do on the Elastos blockchain. And there will also be a delegated proof of stake model in here as well. Now, there will be a 4% annual inflation for Elastos, blocks happening every 2 minutes. 30% of every block's reward will go to the Elastos Foundation, which I think is actually really good for long-term stability. 35% will go to the proof of work miners, and 35% will go to the proof of stake, which is, of course, all very cool. Now let's have a look at the team. Now, the project founder is a man named Rong Chen. Now, you may not have heard his name before, but you've probably used a product that he's developed. If you've ever used Windows Vista or Windows XP, he was the project lead behind that. So he's definitely got the experience here. Now, he's been working on Elastos for more than a decade now, designing the architecture, thinking about how the whole thing's going to work. We've also got Feng Han. He is an advisor at Huawei. We got these guys. That guy looks familiar, doesn't he? Interesting. And what about this guy? He also looks... Da Hong Fei and Jihan Wu. What are these guys doing here? This is also a big part of the connection here with Elastos. They've got some really big name partners behind them. Bitmain is a partner. Neo is a partner. Who will be... And on goes the list. We're going to look at some others as well, but I really want to focus on Neo and Bitmain. Bitmain, of course, being the world's largest provider of hashing power for the Bitcoin network. Now, for a project like Elastos, which is developing an auxiliary proof of work model, someone like Bitmain makes a great fit for a partner because you can make sure that you are going to have a very stable and secure blockchain, knowing that you have so much hashing power backing you up, which is fantastic. And of course, the guys over at Neo are really working to make that smart economy of the future. Digital assets, digital IDs, all of this stuff is a big part of the Neo vision. And the fact that the Neo virtual machine will be interoperable with Elastos, interesting times ahead for sure. Now, we have seen a recent partnership with SAIC Motor. Now, this is a pretty big and exciting partnership. Essentially, this is an automotive manufacturing giant over in China. And so to see a big partnership like that, very exciting for sure. Now, we've also seen them partner up with Zappia. Cool. Now, one quick shout out here as well to Blockchain Brad. He has been doing crazy amounts of content on Elastos. He's got a lot of interviews on Elastos. So if you want to find out more information about Elastos, go look up Blockchain Brad. He's got some great interviews with Rong Chen, for example. And so you can actually go over and listen to what the man himself has to say. So definitely go ahead and check that out over there, guys. Now, a very interesting thing that's going on here as well. If you lock up your tokens before the 22nd of February, there's going to be a token lock-in. Now, you need 300 ELA tokens to do it, which by today's prices is a decent chunk of change for sure. But I think this is really great because if you are a big believer in the project and you're a big Elastos enthusiast and you're planning on holding long-term anyway, this is definitely something that you should be investigating and looking into, because essentially they're going to be paying out a dividend, so to speak, on locking your tokens up. So if you have 300 tokens and you lock them up for 1 year, you will get 4% back, 2 years 5%, and 3 years 6%. So if you're looking at this as a long-term hold, and that gets paid out, of course, in Elastos tokens. They don't compound the interest either if you're thinking about that for the 3-year model. But if you're looking at this as a long-term hold, why wouldn't you do that? That's great. That's great. You literally just get extra Elastos tokens, which is fantastic. And if you happen to be holding a gigantic amount of Elastos, 10,000 or more, you can even go and be an advisory board member. Cool stuff, if you're into that. Now, having a quick look here at the roadmap, they are starting to actually get out in March and going on tour. So they're actually going to get out and start talking to people, going out and saying, hey, would you like to build your application on Elastos? Here's what we have to offer. Watch out for business announcements to start coming up. I mean, we've seen a couple great partnerships already with SAIC and Zappia, but we definitely will see more partnerships coming out as they start getting out to conferences, start spreading the word about Elastos. Elastos Capital will be launching in March as well. This is a fund which aims to help support applications being built on Elastos. As the year moves on, of course, we'll see different software developments and so on and so forth. But the thing I really want to point out here, December, the mining of Elastos chain and Elastos ID chain will be open and accessible. That's an important thing to point out. So that's still to come. Still working on the integration for that, so you can keep that in mind. Now, I was trying to think, what are some of the potential drawbacks here for Elastos? Now look, you might see proof of work as a drawback. Personally, I think that it has proven itself over the years by providing a very secure network and, of course, linking themselves to the Bitcoin blockchain. Very smart move. It is, of course, the most secure of blockchains, without a doubt. But perhaps it's something you're concerned about. Now, the huge scope of the project perhaps is something that you might see as a bigger concern. You know, people are resistant to change. Adoption could be really slow on the project. Maybe they're trying to do too much. Maybe they should just focus on doing a blockchain-based operating system. Maybe they should forget about some other stuff. I don't think so. I think you've got some great minds behind this who've been working on it for a really long time, trying to make this the best gosh darn product possible. But nevertheless, something to think about. And of course, there are some pretty big operating systems out there already. I mean, Microsoft, they're kind of a thing, aren't they? What's to stop Microsoft from looking at this and going, oh my gosh, we got to do something quick. Somebody develop a blockchain infrastructure. Well, that is possible, and I'm sure that a lot of these giant tech companies are actually already thinking ahead of the curve, trying to say, okay, how can we develop in the future? But the thing is that they would have to start from scratch, like Elastos did, and has built up over the years. It's not so easy for them to change their business model overnight. But nevertheless, they have got big, well-funded competition. So that's something to think about as well. Now, Elastos is currently trading near $63. We haven't seen any gigantic retracements on it, nor have we seen any giant spikes on Elastos yet. And I think that's something to keep in mind, of course, except for the initial entry into the market and the climb up there. But ever since then, we've just seen Elastos kind of chilling, down around $50 and $60. Now, this is a project, 33 million maximum total supply, by the way. This is a project that definitely has a lot of potential. They've got good partnerships. They've got a good idea. I think this is one that has a lot of room to grow. Now look, the circulating supply isn't exactly known yet, so the market cap hasn't been defined yet. But certainly I can see this being a very big project as the year goes on. Not to mention, of course, that currently the liquidity is relatively low because it's only listed on one exchange. Now look, we've seen this story play out quite a few times in the cryptocurrency space. Something's just listed on one exchange, kind of chills, goes up and down a little bit, but doesn't get any massive volume. I mean, $75 million in 24-hour volume is pretty big, without a doubt. But wait until this gets on Binance, wait until this hits Bittrex, wait until this hits half a dozen other big exchanges. Then we're talking. Anyway, I like Elastos. I think it's a very interesting project. I think they're solving real world problems. I think that they've thought ahead of the curve and they're trying to think ahead of the curve even more going forward. So it'll be interesting to see what they end up really showing us as the year rolls on. But I want to know from you guys, what do you think about Elastos? Are you bullish on it? Do you think that it's a great project? Or do you think that there are some potential weaknesses or the competition's maybe too strong? Let me know about it in the comment section down below. Long live the blockchain, and peace out till next time.